keeping an eye on what could be a political and economic storm at the same time. This is from John Roberts, our White House correspondent, who's telling us that President Trump has indeed given his aides a green light to go ahead with sanctions on an additional $200 billion worth of Chinese goods. This had been telegraphed for some time. Bloomberg mentioning this report as well, that the administration was seriously considering it. Now word that it could be imminent. We just don't know when it will happen. The effect on the market was quite clear. We were up and now we're down about 50 points here. We're up close to 70 points to Nuveen Asset Management Chief Equity Strategist Bob Dahl. And Bob, in those many decades we've known each other, you've always cautioned don't jump on headlines or flashes, and that was before we had things like flashes like this. But is it your sense that if the president were to impose still additional tariffs on the Chinese, that this could hint of a prolonged trade battle and that the markets would not like?
Exactly right. It's the uncertainty associated with this that the markets don't like, Neil. Look, it looks like Mexico in principle, maybe Canada agreement in principle, Europe. And then the president calls President Xi and says, OK, it's your turn. And we'll see. This could be prolonged. It's pretty clear the Chinese don't want to come to the table in any serious way prior to the election. After that, we'll see. But this is going to last for a while, Neil, and markets don't like it.
You know, Bob, it was only a couple of days ago the president had some say, blinked on this by saying, you know what, I want to restart these talks with the Chinese. And the Chinese were open to that, didn't commit necessarily to a time and a place. Then lo and behold, we have this move. What is going on? Do you know?
Hard to say. There's so many cross currents, and as you well know, Neil, there are different words coming from different people in the administration, and therefore it's very difficult to ferret all of this out. Look, I think most people in the administration would like to have a conversation with China, and probably vice versa. But the cross currents are, I'm gonna beat you up until you come to the table, is what we're seeing today. Thank goodness we have these phenomenal earnings that are keeping the market from going down because of this trade and tariff problem.
You know, you and I have discussed this before, Bob, but one of my many crackpot theories on the trade back and forth is that the markets, the smart guys like you, think that cooler heads ultimately will prevail and that we won't get into a full-blown trade war that could disrupt more than just markets, economies around the globe. And that's what they're hoping. What do you make of that?
Yeah, I don't think that's such a crackpot theory. I think that's reasonable. Look, the president knows that different approaches have been tried over the years, and so far nothing's worked, so he's trying something different. We can like it, we can dislike it, but he's also a man that doesn't want to sink the economy and sink his political will, and therefore I think cooler heads will prevail. But make no mistake about it, he's serious about trying to say intellectual property in China, you got to stop stealing it from us.
Let's talk a little bit about the markets and where they stand right now. You know, they're undeniably strong, and the feeling seems to be, absent a trade war, they'll get even stronger, that they're not necessarily very rich if you look at the lower tax rates and everything else. Where do you stand on that whole thing?
Yeah, look, the bull market is not over. That's clear because the earnings pattern remains strong. But to argue that we're not in the more mature parts of this bull market is hard as well. So more to go, but the easy money still is in the rearview mirror, Neil. Look, I think the PE, or the valuation of the stock market, peaked in January. Now it's all about earnings. If we have good earnings, stocks can go up, but probably not as much as earnings. Think about it this year. Earnings are up 25%. Stock market's up 10-ish%. Therefore, PEs are down 15%.
Well, that's an interesting way of looking at it. Real quickly, what is your view on this, the strength in this market and interest rates in the face of the Fed probably hiking rates at least one or two more times? We've seen some inflation data both on the retail and the wholesale side that has been softer than was earlier thought. Could that keep the Fed at bay? It
could. Look, Neil, that we're this far into the economic cycle.
Yeah.
The economic growth is as strong as it is, and we have not much inflation, is a miracle. It's really good news. Inflation's picking up, but at a very slow pace, and as long as we keep that pace, the Fed will take its time.
It's a wild card in my final question, even though I said that last one was my final question. But the Mueller investigation, where this goes, and, you know, you heard today his former campaign manager, Paul Manafort, striking a deal with the government. Is that just an outside development? You can't make out how it's going to go, but it's a big uncertainty, right?
It is a big uncertainty. Look, I hate to make Washington, D.C. unimportant, but as long as the economy and earnings are good, Washington, D.C. is, you know, down the list in terms of importance. We'll watch it. It'll get a lot of headlines. Markets might not like it for a minute or two if something untoward develops there, but earnings will drive this market, Neil.
Yeah, they always do in the long run. Bob Dahl, always good talking to you, my friend. Thank you. Have a good weekend.
All the best.